I think final final quarter was fully in line with our revised guidance, which we had to do for sure. But very pleased with the outcome of the last quarter. I think we saw a very good acceleration in enterprise. We also saw stabilization in our SMB business. Clearly, it's a new norm after the COVID pandemic. The market is in a different state, but we feel that we have delivered very well against our new guidance there.
We had a conversation this morning about some of these pandemic trends continuing for much longer than people had anticipated, given Omicron. Are we seeing as many downloads at this point, though, when we enter through 2022, that you would expect, given that the work from home trends and the sort of flexible working dynamic seems to be with us again throughout this year?
Yeah, but I think from our perspective, we saw the significant surge in demand in 2020, throughout 2020, really beginning, and then also towards the end when we had more lockdown situation, as you mentioned. But I think during 2021, already in the way we run our business and with the projects we're running, we saw normalization there already. In some quarters already a significant slowdown because the industry and the markets overall were a bit slowing down, so less projects on digitalization. So that hit us throughout 2021, but then towards the end we saw this picking up. But this demand on our side at the moment is not driven by COVID anymore, but really by larger projects in digitalization.
Oliver, I don't understand why you're buying back your shares. Growth companies very rarely at this stage of development buy back shares so aggressively. Why are you buying back up to 20 million shares?
Yeah, I think it's a way for us to also return value to shareholders. Very clearly, we had the question around our capital structure for quite a while, actually since IPO. At IPO, we had a leverage of more than 3 times, but we're very cash generative, very profitable business with good growth and good growth prospects also. So the question was apparent by investors over time how we deal with our capital structure, and we felt now with the delivered guidance last year. And also the good visibility on the business and the organic profitability, really, we feel it's about time to return money to shareholders.
Oliver, wouldn't you prefer, though, rather than looking over your shoulder at your share price, which is roughly a quarter of where it was at its high in 2020, wouldn't you prefer to use that money to buy yourself more growth?
Yeah, absolutely. I mean, this is clearly something which we did in the past. If you look at 2020, we did M&A in the middle of the pandemic and also in 2021. But I think the way we've designed this buyback program is by no means limiting the flexibility. That's not to say that there's M&A on the table at the moment. Clearly focuses on organic delivery. We promised to the market a new outlook, which we're laser focused on to deliver. But that buyback program with the cash generation that we have is not limiting us in investing into growth going forward.